Welcome back, everyone. Long time no see. I am Cas Piancey. I'm joined as usual by my partner in crime, Mr. Bennett Tomlin. How are you today?
I'm doing well. How are you, Cass?
I'm doing great. We're joined by a special guest today, co-author of the book that Bennett and I both just read and got through, called Resistance Money. It is a book about Bitcoin, I guess is how I'll term it. But Andrew Bailey, how are you today, sir?
Happy to be with you guys. A fellow partner in crime, just for today.
Right. Outside of that, never. But it is nice to have you here because, yeah, this was a fun book for us to read. And I think we wanted to go over some of the parts that we disagreed with you on. Now, I just want to preface this to say to everyone that this isn't to suggest that I dislike the book or that Bennett disliked the book. We actually both enjoyed it a lot. When it comes to Bitcoin maximalists, if you hear that term in the cryptocurrency industry, it's generally derisive and not a term of endearment, and it usually comes with some pretty heavy baggage, I would say. So Andrew and his co-authors, I would say, are some of the more sane individuals in the Bitcoin maximalist space.
As sane and maybe as people can be when they voluntarily decide to study philosophy.
Yeah, that's a whole other can of worms. But I think your book is I really enjoyed it because it spoke about a lot of the things that we generally take issue with when it comes to maximalists of any sort. The idea, I think maybe you're not a maximalist in the sense that maximalists suggest that you shouldn't really be relying on any other form of money outside of Bitcoin, and you should be pouring as much of your resources into Bitcoin as humanly possible, like Michael Saylor or something. Whereas you guys seem to at least allude to and discuss the fact that there is room for and reason for cash, credit, and other concepts of money to exist. Can you tell me how you're able to operate in that space where you both think that Bitcoin is resistance money, important, necessary, but also think that these other ideas of money are also necessary as well, without butting heads with everyone?
I can't promise to not butt heads with everyone in general. But here's the basic view. Bitcoin is resistance money, which means that it's a tool to bypass would-be authorities, whether corporate or state. And that for those of us who want or need to do that, Bitcoin is one thing to put in your arsenal, alongside other tools like encrypted messaging and, yes, cash. Cash is probably the best form of resistance money that we have today, physical US dollars. It's America's finest export, as one of my other co-authors, Will Luther, likes to say. It's nonviolent, it's freedom technology, it's highly private. And when you can, use cash. It's great resistance money. Unfortunately, you can't use cash over the internet, hence the search for digital cash, computerized or digital versions that have some of the properties, if not all of the key properties of cash that allow it to be private or to bypass would-be censors or surveillors. So that's how I see them as coexisting just fine, is that there are a variety of tools that one might use. And in the physical world, cash is one of them. In the old days, it would have been gold. Those are the old days. Those are behind us. But physical bare instrument money, this is a powerful tool for freedom.
Do you think that it hurts Bitcoin as a feasible, global currency? Does it hurt the image of Bitcoin when the people who are the loudest proponents of it are people like, maybe I shouldn't name them, but Saifedean, or these other people who are, or even for that matter, people like Michael Saylor, who are telling people to like mortgage their home and buy Bitcoin? Like, doesn't that harm your concept of resistance money? Doesn't that actually hurt the idea of what this is supposed to be, as opposed to like it being this usable thing, this transactable resistance money for dissidents or journalists or individuals who might, sex workers, whoever is being prosecuted? Instead of it being that, now it's seen as the up-only tool. And don't you think that really does hurt the concept that you're rooting for here?
It might be useful to separate those two examples you gave, because I think there are important differences between the way Saifedean sells Bitcoin and the way Michael Saylor does. Michael Saylor almost exclusively sells Bitcoin as a number go up tool. You buy some for US dollars, and then the value in US dollar terms will go up later, but you never sell. So that is the fundamental Saylor story. I think Saifedean's has a number go up element, but it has its roots in this idea of hard or sound money, and that Bitcoin is the very best ever version of sound money that's ever been created. Now, the place where I take issue with Saifedean and those like him is I don't think Bitcoin is an optimal money or the best or the ideal money. I think that a fixed supply money is useful and better than many other monies that are governed by irresponsible central banks. But it's not obviously optimal at all. So it's better for some people who don't have access to high quality monies, and maybe worse, or not as useful for those who have access to things like the Singapore dollar, the Swiss franc, or the US dollar. And we can know that fairly easily just by looking at their behavior. What do people choose to use as a money when they have access to Swiss francs or US dollars? Swiss francs or US dollars. How about those who don't have access to high quality monies though? They will turn to Bitcoin.
One of the concepts that was discussed a little bit in the book and is discussed a lot in Bitcoin circles, and Cas and I were talking a little bit about this before the call. One of the things that fascinates me about Bitcoin is how much in its hardness and some of its unique monetary properties come in part from the uniqueness of Satoshi as the founder. And this was discussed a little bit in the book, like that there was this person or group of persons who worked on this thing for several years, created it, dealt with a variety of different potential attacks, accrued 5% of the supply of it, and disappeared. Did Bitcoin need to have kind of that type of divine conception to be able to develop into an effective form of money?
Bitcoiners sometimes use that phrase, immaculate conception, to describe Bitcoin's birth. The idea here that it was more or less a gift from the gods without a father, and maybe only a mother who then died or left. That's the image. I suspect that is a contingent matter of historical fact. Yes, this was the only way that Bitcoin could actually be born and launch. And one piece of empirical evidence we have that suggests that is the long line of digital cash projects that failed for various reasons. At least 20, sometimes people count as many as 100 from, let's say, 1982 all the way up to 2008. And we can try to classify the various reasons for which they failed, but they all failed. And somehow Bitcoin succeeded. And it wasn't purely its technical design that enabled that, although its technical design was important. It was also the properties of its founder and the unique place in time that Satoshi found himself with things like Occupy Wall Street. Well, that came later, but the let's say, discontent with monetary systems, discontent with the US dollar, with financial empires built atop it. So there are a number of contingent things that enabled Bitcoin to grow, to actually have a non-zero value for a long amount of time. And I think an important one of those was Satoshi's departure, because then it doesn't look obviously like a scam in the ways that so many other crypto projects since then have, where a founder is extractive and just trying to sell you a token for something that he made for nothing. And Satoshi didn't do that. And that can inspire early confidence. And, early confidence is really important to get the game theory lined up so that people start converging on that outcome where they're both choosing Bitcoin. And the way to make that happen game theoretically is that one party has already pre-committed to choosing Bitcoin. And in an important way, Satoshi did that by mining Bitcoin for so long and at such great expense.
It was also interesting to me, and you alluded to it there have been a lot of digital cash projects that were tried before and are in some sense still being tried. And it's interesting to me, especially at this point, to compare like Bitcoin's conception and where it's gone since then, and like what I think of as kind of the most successful other digital dollar project still going on, which would be Tether, which is in many sense kind of the spiritual successor to Liberty Reserve and the Liberty Dollar. And there you have founders who are people who like definitely exist and you can mostly put names and faces to them, and a big pile of money that kind of exists in the same way it did for Liberty Dollars or Liberty Reserve, and is substantially smaller than Bitcoin in market cap, but has succeeded at a scale far beyond many of the other digital cash things that kind of anteceded it.
And to add on to what you're saying here, I just want to say, like, Tether is the fuel to the Bitcoin or Ether or whatever engine. Like, those cryptocurrencies are getting purchased with Tether, and Tether is the currency that's getting transacted with the most. It isn't Bitcoin, it isn't Ethereum or Ether, it isn't, whatever, it isn't Tron. It's Tether. And I like, not to skip to the point of your question, but like, in my mind, doesn't that counter, in a sense, the idea that Bitcoin is this really good digital money, where how much transaction is taking place on Bitcoin, even on layer 2, even on your Lightning networks and stuff like that? How many transactions are taking place? How much is this helping the people that, Bennett and I are on the fairer side of the criticisms of Bitcoin, I would say, but like, how much of it is criminals or whatever versus like dissidents or sex workers that you want to help, people who you might not love what they do, but at least you can agree that they deserve an ability to make a living. And so how I guess I struggle to find still to this day, as much as I'm not someone who's anti-Bitcoin, I struggle to believe that a lot of the usefulness of it is either taking place at all or happening for positive benefits. Can you talk about the reasons that you disagree with that? Or Bennett, sorry.
What I was kind of getting at is like, I'm curious which one of those digital cash projects is more commonly used as a cash replacement for people who can't get dollars or Swiss francs, to return to what we were saying before. And I think, as Cas was kind of saying there, in many cases, it's not Bitcoin. And like, if there's any tension with Bitcoin's stated goals in that fact.
Here's a thought that many Bitcoiners had for a very long time, which is that your choice in money will be determined by its hardness, and that you'll choose the so-called best money, and that will be a fixed supply money or something that's close to fixed supply, something gold-like. And what the empirical evidence about Tether's use and other stablecoins shows us is that people have other criteria they use to select money. And it's not just issues about governance or supply. In fact, unit of account stability seems to be very important. And that's why people select either US dollars or US dollar substitutes, things like commercial bank balances or PayPal balances, or something even further downstream from that, like a Tether balance stored in your own wallet. What this shows is that there are trade-offs. And depending on what your goals are, there will be different tools that will be useful for you. So let's say you need a moderate degree of resistance. You don't have access to a US dollar denominated bank account. You don't even have access to Cash App or PayPal. But you want US dollar denominated still, something that has the stability of the US dollar. You can turn to Tether on Tron. Now, at scale, how much privacy or censorship resistance will this afford you? Virtually none. Virtually none. At a smaller scale, you might slip through the cracks. That is, nobody might care enough about you to monitor or to try to block your activities. So even though physical US dollars might be illegal in your country, you might still be able to get through using Tether on your phone with a little Tron wallet. And this, in fact, is an extremely common story, that this is how Tether gets used when it gets used for payments.
Yeah. Well, it calls into question, like you just talked about, 2 layers of trust that you're introducing to this transaction, right? Like if you're someone in a country that doesn't have access to US dollars and also finds it burdensome that Bitcoin is volatile and maybe it's difficult to it's a little bit more difficult to transact in it. So you rely on Tether on Tron. So like we're talking about 2 like serious layers of trust issues. One is Tether. 2. At least 2. That's right. At least 2. And one of them is something that Ben and I have gone over a long time, which is Stablecoin. And we have I don't know what to label Justin's son as, but yes, another individual who is not to be necessarily trusted with your finances. And so you introduce both of these instead of, say, a bank or your country's currency. And at what point do these trade-offs seem less and less worth it and more risky than the alternative, which is like what we're talking about for the old times, right? Like we're talking about cash, we're talking about credit, we're talking about bonds and boring stuff. At what point is it is that like, why is anyone doing this, I guess, is my question for you. Why do you think that there are people doing that instead of Bitcoin, instead of cash, and instead of these other forms of money?
Have you used Tether on Tron?
I can't say that I have needed to, I guess is what I would say.
Cas, it's a good experience. It's buttery smooth. It doesn't require KYC. There's no email. There's no name. You can just get some Tether instantly, and then it just says, it has the little dollar symbol. They're not actually dollars, but they function like dollars until they don't. And then you can send them virtually for free to someone else. And no one can stop you, or that's what it feels like, at least, because you didn't have an account, you didn't have your name. So it has all the trappings of censorship resistance. And it feels great, buttery smooth. So I don't think it's a mystery why people would use Tron for payments in Turkey, in Argentina, and many other places besides. Compare that to the Bitcoin experience. Bitcoin is weird. You have to wait 10 minutes for settlement if you're doing an on-chain transaction, or you have to think about things like custodians or Lightning channel management if you're using a layer 2, which is weird for most people. So having tried both, I don't find it mysterious that people would turn to Tether on Tron. And maybe you'll find the same if you try it.
I guess you just segued us into the next topic possibly there. A criticism that the book leveled against critics was, and you guys use this term kind of vaguely. So that was another issue that I took with this. So we'll get into that right now too. But like basically what was stated is that if you're not using the thing, then it's pretty difficult to criticize it. Now, Bennett and I have the benefit of having tried, using cryptocurrencies back in the day. We haven't used, Bennett maybe has used it more recently than I have, but I haven't used any cryptocurrencies in years. I haven't cared to. I have no need to.
Lucky you.
Lucky me. But also, you and your co-authors seem to lump in a bunch of different categories of critics into one. And that was like part of my issue, is that there was this concept of not that critics need to account for lost opportunity, that there is this lost opportunity cost for all critics, that we have not been able to cash in on these dreams, basically these numbers, the number go up argument. And a bunch of different people were included in these categories. So it was economists like Nouriel Roubini and Steve Hanke, or I think that's how you say his name, I'm not exactly sure. It was academics, it was journalists, and then like a broader critic. And I think, so one, obviously Bennett and I come from a journalism background. And I think that it's really difficult to lump in journalists into that broad category that you guys are talking about. I don't know why I would need to mention every time I write an article about, say, Bitcoin, like include in the subheader, heads up, by the way, the first time I reported on Bitcoin was in 2019 or 2018. And if I had purchased some Bitcoin at that time, then it would be worth this amount. Like, that seems pretty pedantic and silly to me, because someone who is covering the oil industry, for instance, if they're covering, Enron or Exxon, it's Exxon, should they be talking about the first time they covered Exxon and be like, if I'd purchased their stock the first time I reported on it, then I might have this much? Like, well, that's not a good argument for being a good reporter on Exxon. That's not a good argument for whether or not you're objective and fair in your coverage of the oil industry, whether or not you purchased a stock at a certain date, and whether or not you're invested in the industry. That has nothing to do with your actual objectivity. Now, you guys mentioned Nouriel Roubini and these other like people who, their criticisms are perhaps different than the coverage of a journalist. So I think it's worthwhile to parse that out and separate these classes of critics, because journalists are reporting facts, and while Bennett and I might be on the critical side, we're not saying like Bitcoin is a scam, it's going to zero all the time,
You raised two issues, two kinds of critics. Maybe we should leave one of them for later, which is whether you've actually used as opposed to held. And I think there's separate issues there. One thing that we're responding to in making these arguments is the claim from Bitcoin critics or from skeptics more generally that anyone who ever says anything positive about Bitcoin must disclose how much Bitcoin they have and how much it cost them. This is not an uncommon cry for disclosure. And we think that if that is fair, then by parity of reasoning, disclosure of lost opportunities is fair as well. Now, you could respond to this argument by denying that second claim and say, okay, you know what, maybe disclosure is not so important after all. But if you've been writing about Bitcoin since it was $17 each, and you've been saying that the actual value is zero, and this is an actual case, this is our friend Patio 11. If you've been doing that for 11, 12, 13 years and been proven empirically wrong, this is likely to induce various biases in you. The same kinds of biases or mirror images of the biases that those who have held Bitcoin for very long have. So their bias is to be pro, to pump, to say number go up. And if you've been calling for Bitcoin to go down to zero for so long and been proven wrong, you're going to be a little bit salty about that. And you're going to want to be vindicated and for Bitcoin to eventually go to zero. So you'll eventually be proven correct. So we think it's fair to point out bias in either direction, or if it's fair to point out bias in one direction, it's fair to point it out in the other.
Okay, just to counter here, because you and I we were just talking about Tether, and one of the things you said was like, have you used it, right? Have you bothered to use this product that you're talking about and criticizing? And like, I know that me saying no, some people would be like, well, that functionally is a problem. The fact that you aren't using this thing that you're criticizing is a problem. And I want to counter that with a couple things. One, just because I'm criticizing Tether or Justin Sun or whatever, doesn't mean that I think it's instantly going to fail, or that I'm not aware that there are some positives that exist within this realm. And two, I want to say that like the idea that if I'm proven, like that I'm looking for instance, that I'm looking for vindication from the Tether story. I don't think Bennett and I are looking for vindication anymore. I don't know about Bennett. We've talked about this. I'm not certain what's going to happen with Tether. My general feeling is that probably nothing. Like, they're probably going to go on just fine for the time being, at least for the next few years. I don't see them getting shut down. I don't see like some, people tell me I'm crazy for switching my opinion and changing my mind about like in 2018 and 2019 and probably even 2020, saying for sure it's getting shut down. It's definitely going to happen, to being like, I don't know what's going to happen with Tether. I have no idea. Would it feel good to be vindicated and for Tether to get shut down and for all that? Sure, maybe. But I'm also not
amazing.
Crazy.
Come on, man.
Sure. But like,
you guys are going such a victory lap. I can just imagine Bennett's videos. And he's going to have the receipts, right?
I'd be an insufferable asshole for at least 48 hours after it happened.
You're going to have 6 years of receipts of tweets that you can pull out, and you will have a thread with all of them. I can see it already.
For sure. And I don't disagree with you, Andrew. But I do want to say that I'm also not insane that I'm like, well, that's definitely still going to happen. Like, I'm a human being. I can see that there are possibilities and probabilities here, right? And so I just want to say that, like, as much as, like, I guess I don't know if Patrick McKenzie, Patio 11, as you mentioned, is he still saying that Bitcoin is going to go to zero? Like, I don't think I've seen that from him in a very long time.
He had a very interesting discussion of this with Tyler Cowen in, I believe, October of 2023. It was Q4 or so of 2023, and was pretty circumspect. Like, you know what? I've been calling for it to go to zero since it was either $13 or $17 a pop. I feel like I should say the market has proven me wrong, but I still don't think that they have. So he felt conflicted and was quite upfront about that in a way I found admirable. It seemed honest to the actual psychology or what it's likely to be, to have been proven wrong by the market for so long. Maybe that's too strong a term, but to not have been vindicated by the market for so long, it's got to do something to a guy.
Just to quickly add on to that, I did a podcast with PJ Vogt a while ago, and one of the questions he had for me was like, doesn't this make you crazy? Like, doesn't it make you crazy to be calling out a fraud or like something that you think is a fraud for a very long time, and to see it just continue and get more popular and get exponentially bigger?
And the crazy came first.
And that, well, I was like, I've always been crazy. And he's like, no, really, like, doesn't it actually drive you crazy though? And it's like,
I think you went to Hong Kong before you became a professional crypto critic, and that suggests that the crazy came first.
But I do want to say that, like, I think he's right in that there's certainly levels to this. I mean, Bennett and I did podcasts. We did tons of articles. We've spent a large portion of our known lives covering cryptocurrency and discussing Tether and Bitcoin and all of this stuff.
I don't want to know what I did in my unknown lives.
I just mean publicly known.
One can turn to the archive.org to find out what Bennett was up to in 2016.
Let's talk about the intermittent fasting. Anyway,
Deep cuts.
but anyway, I guess.
Speaking of deep cuts from Bennett, could I give an example of the kind of thing that I have in mind when I talk about critics who need to use the tools they're talking about? There's something Bennett did a few years ago. It was speculated that Craig Wright had done a man-in-the-middle attack by which to get fraudulent signatures of a message from Gavin Andreessen. And it was speculated that, okay, here's how you do it. You have a fake copy of Electrum. You have a Wi-Fi point that does this. The copy of Electrum has been modified so that it returns as true any check for a signature validity as long as it has like 3 characters at the end of it, CSW or something like that. Bennett went to the GitHub repo, I believe. You compiled it. It changed the 3 lines of code, compiled it, executed, and discovered that, yes, this attack could work as it was speculated to have worked. So you actually dug into the tech stack. You played around with it, you used it, and you vindicated an important hypothesis. That's the kind of thing that I like to see in critics. What I don't like to see is a critic who has never done that and who still has opinions about how they think these things go. Similarly, critics, sorry to bag on you guys, but who speculate about why people use Tether but haven't actually used it to see, there's something to this user experience that's actually appealing.
Well, just to balance this out, part of my journey to discover even what Tether was that I like saw Tether on a cryptocurrency website where I was purchasing whatever, Bitcoin, Ethereum, whatever it was. And I saw this thing and I was like, oh, dollars. Like I can buy out into dollars and just stabilize myself instead of needing to be in this volatile cryptocurrency. And then I suddenly realized later on that I was not buying dollars, I was buying Tether. And I think that is like a big part of the journey that got me started on this was being like, oh, I didn't even know what I was purchasing. And I feel like that's most people probably dealing with Tether.
Probably.
Is they have no idea what they're actually getting involved in. So these Tether disclosures that Bennett and I and 3 other people in the entire fucking world care about, they're not looking at those disclosures. They don't care about those disclosures. They don't care about when Tether says that, oh, it turns out we only have 3/4 of every dollar that we say we have. They don't give a shit. They just simply do not care because they're busy thinking they have $1 in their account. So I definitely empathize with that idea and this concept of, again, needing to use Tether to be like, I understand why it's useful. I don't think I need to do that. I don't think I need to use it to be like, oh, I see why people like it and why it's good in cryptocurrency. I get that. And it's okay to be a critic from the side. I don't need to interact with Tether on a daily basis to be a critic of it, you know? And that doesn't mean, again, though, there's a weird level to this where if I'm not acknowledging those benefits, then you're right. I'm being unfair, right? If I'm not even acknowledging that it's beneficial for whoever it is, that it's still useful for speculation or for whatever real purpose in the real world, then I'm not being honest with myself or with everyone else. And that's a fair criticism of the critics, I think.
Here's an example that we might find it easier to agree on. Bitcoin maximalists especially are upset that Tether left the Omni layer and has moved to Tron. I think if they've used Tether on Tron, they would be less upset if they were reasonable because it's far easier to use Tether on Tron. And it doesn't take very much experience to understand this. So there's a kind of unreasonable, angry person who's like, why isn't Tether still on Bitcoin? Because it's easier to not be on Bitcoin is the answer.
Are there lots of Bitcoiners upset that Tether doesn't use Omni?
Not anymore. They've given up that fight.
I didn't realize that group exists. I knew some Bitcoiners who were upset about Tether using Omni because it drove up transaction fees and stuff like that. And there's no benefit to using Tether specifically on Bitcoin because Tether's centralized, yada, yada, yada.
Right.
One of the maximalist theses is that everything will eventually or should eventually be on Bitcoin. So if that's one of your theses, then you should think that Tether will or should be on Bitcoin. And that thesis is undermined when you see people not actually just not doing Tether on Bitcoin, but removing Tether from Bitcoin and putting it on another chain, which is in fact what's happened.
This discussion is interesting to me in part because I feel very strongly that you can be critical of something without using it. And I think I've done it successfully in the past. And even in the Electrum example you gave there, other people before me had done similar things, or at least had documented how it could be done. And so I wasn't really doing it to understand the attack. I was doing it because I thought it might make my piece of content I was producing more compelling to have like the actual example, and here's how it would be done step by step. And like in the past, in other non-Bitcoin criticism I've done, like I think of the Fei stablecoin protocol. Even before it was announced, I'd been able to go through the white paper, identify math that they had done incorrectly, and then model out their various incentives and stuff for their system and demonstrate, like in that modeling, that the system wasn't going to work well. Kind of similarly with Terra and Luna, I was able to go through the documentation and stuff, never use that coin, and be able to point towards like issues.
Bennett was calling that out. Bennett was calling out. We recorded our episode on Terra and Luna days before the entire thing collapsed. Neither one of us ever had to use the protocol. We didn't even have to. Bennett dug in and I dug in on the most basic level. Essentially, we didn't do.
I mean, I went a little deeper than that.
Sure, but I'm just saying, like, it didn't take us weeks and weeks of research or something to be like, oh, it's a Ponzi scheme. This is a Ponzi scheme. Let me put $6 in and find out what happens to my $6. We didn't need to do that to find out what would happen to any money that we put into it. And on top of that, like, I think there are other journalists, and maybe I shouldn't name names, and I'll just name a publication. New York Times, where there were journalists who were espousing some of these protocols and talking about their success.
Was this Kevin?
And like, it was it was Kevin. Yeah, it was Kevin.
Last name not
but
given.
Like, just Kevin. Let's just go with Kevin.
Could be any Kevin who works for that publication covering this beat.
But like, I do think that people took note of that and were like, "Yo, you discussed multiple scams as like." Net positive or like VC backed bullshit as like these great innovative things, and his reputation overall hasn't been hurt, but I know amongst people like us it was like that was bullshit, dude. Why did you do that? And I think at least Bennett and I don't have to think about that when it's like, yeah, well, we didn't put any money in Terra and Luna, you know. And at the end of the day, the same goes for Tether, where it's like, I don't think that Tether is going to zero anytime soon. I don't think the authorities are going to freeze every Tether right now. But if it happened tomorrow, like, I don't know, we were still one of the first people talking about this thing. We were still like, I never touched it, right? Like, I don't have money in Tether right now. I don't think about it as something that like should necessarily exist and be a good part of the world, like some other people certainly do. But yeah, I guess I'm curious why you guys have such a strong position on this idea that either people need to use the protocol or they need to divulge this disclosure. Again, where I do think actually disclosures are like quite important, but I also think that my like lost opportunity disclosure isn't a reality. Like, that's not a real thing. What am I going to disclose on anything I ever report on that I might have been able to purchase it at some point in my life? I mean, that seems so absurd to me, I guess.
I have another example about why use can be helpful, but here's a concession to make, which is that I don't think that always, in every case, is use required to understand or to critique. And the classic example that people throw back to me on Twitter when I make the case for this kind of critics should be users is, well, what about critics of drugs? Should they be users too? What kinds of drugs? And the answer to that is no, you don't need to take fentanyl to understand its dangers. So also for many other dangerous drugs. And yet, nonetheless, there is something to be said here for if you want to understand why people use drugs and their effects, talk to actual drug users, even if you don't become one yourself. So maybe that's the slightly more moderate version. And the best philosophical work I've ever read about psychedelics has been written by enthusiasts, professional analytic philosophers who have used psychedelics. Bennett, what is this book you're holding up? What's this visual aid?
This is PCAL. It is half how to synthesize and experiential notes on various psychedelics. And the front half is a lightly fictionalized story of two organic chemists who synthesized a bunch of psychedelic compounds and did a bunch of experiments on psychonauts. And I was pulling it out because my field of study in college was biochemistry, and I originally intended to get into drug discovery and design. And it was funny to me because there's a long history of drug chemists experimenting on themselves, because in many cases that was the most ethical way to do the initial
the subject can consent, and he is right here.
Yeah, exactly. And so that rang in my head, especially since even now many of the best chemists I knew or do still know were people who did experiment with various drugs, and from that position would sometimes criticize certain things. And I do think there is often understanding to be gained from using something that you might otherwise be critical of.
There's a special case here where use can disclose things that are very hard to learn trustlessly without, in fact, using. And this is privacy tools. So let's say I want to know for sure that shielded transactions in Zcash are indeed shielded. The best way to do that without having to trust Zuko or anybody else or watching a documentary on YouTube where they go through the process is to actually do a shielded transaction myself. So I know the recipient and the amount. And then I look in the blockchain and see what can anybody else know? And the answer is nothing. And I dig in and I make sure, the answer is nothing. Then I can, without trusting somebody else, have a fairly high degree of certainty that the shielding works as intended. And that's not understanding that can be given to me by somebody else. I have to do the work myself. Otherwise, I'm simply trusting them. And when it comes to privacy tools, maybe you don't want to just trust someone else. You want to actually verify yourself.
If the criticism is of the economics of the coin in question, or if the criticism is of the people who you need to trust to utilize the coin or the currency or whatever we're talking about, do you think that is still like an applicable criticism of the critics? Do you think they still need to be utilizing it to be able to level those criticisms? Or do you think it's a fair criticism if you're talking about almost the philosophy of the currencies that we're talking about?
It might be helpful to use a different verb than need, as though there's some requirement, like we must do this. It could be just that it's helpful or it's useful to be a user. Maybe you're pointing to cases where it is not only not necessary, but less useful or helpful to be a user. So if we're thinking about Justin Sun's long string of dubious activities, having a Tron wallet in my possession that has a non-zero balance is irrelevant to assessing that. What I need to assess that is corporate records and public statements and tweets and deep dives from Mr. Tomlin and so on. These are the tools that I would use to understand that. And one doesn't need a Tron wallet in those cases. For economics, I think it might depend. Sometimes you can learn this from the white paper, but sometimes white papers lie. And so, or they differ from what is in fact the case. There's a weaker way to put it. So what's described and what's still on the website isn't what is in the protocol. And you can either dig into the GitHub repo and read the code, and then you realize, wait a minute, that's actually not the code that's being executed by the client. So there might be three layers here. There's the white paper, there's the open source code, and then there's the app as actually executed on people's desktops and on their phones. And if you really want to understand that, sometimes you could rely on just the white paper, but sometimes you need to install the app and see that it differs in some important way from the code that's on the site, which might furthermore differ from the white paper. And you cannot know that deep, go to that third level without actually engaging, I think. Does that seem right?
Yeah, that seems fair to me. So there's a couple more things. So one of the things we wanted to discuss was this concept of a circular economy, which I think is like generally pretty simple when it comes to a nation state currency, right? If I'm America and I issue American government backed currency that everyone has to use, the circular economy is like almost self-fulfilling. Like everybody within my economy, unless there's some horrible emergency or some huge issue, is going to be utilizing that transactionally, and the government is relying on it, and all of this is kind of happening in and of itself. I think there's a problem with Bitcoin's circular economic functionality. And you guys talk about Lightning Network pretty bullishly in the book. I disagree with that. I don't think that there's any way Lightning Network ever takes off to any real major extent. I don't think this is the answer to the fact that Bitcoin isn't utilized in the same way that cash is. Do you think that is actually the answer, or do you think there is some sort of other solution in the future that could make for a more circular economy? Also, Bennett, if you have something you want to add, please.
So yeah, if I can jump in, like we were talking before about how there's a bit of a spectrum of censorship resistance here, and we can put Bitcoin at one end, but not a lot of people seem to want to go to that end. They're willing to accept other compromises, at least at this point in time. And one of the things that strikes me about if Bitcoin really wants to be censorship resistant on the scale that it could be, it requires people to buy, sell, transact, get paid, and stuff like that in Bitcoin. Why do you think that has been slow to develop? And do you think there's enough people who are willing to accept Bitcoin's unique properties to make that really feasible?
I am not bullish on a hyper-Bitcoinization thesis. So this would be the claim that Bitcoin will become a dominant reserve currency or a currency in which major commodities and markets are priced. So that kind of thesis would predict, give it a timeline, let's say within 20 years that oil will be priced in Bitcoin and that it's a unit of account in which contracts are denominated worldwide, a reserve asset, all that kind of stuff. We've had 15 years of history now. And though Bitcoin's price has trended up across that time, broadly speaking, it doesn't look like its use as a unit of account is ascendant. In fact, its use as a unit of account might be descendant over time as competitors within the crypto market have taken up various niches. So for about 2 or 3 years, how are NFTs priced? These are native digital goods. How are they priced? In Ether. And how are ordinary goods priced? Well, with US dollar substitutes like USDT. So I don't think the empirical evidence suggests that Bitcoin is on this inevitable path towards taking over money. It doesn't follow from that Bitcoin isn't good or useful. So I really think it's important to tease apart a standard Bitcoiner talking point from another pro-Bitcoin but more modest talking point. So the wild talking point is that Bitcoin is the future of money. I just don't think the evidence has vindicated that. And yet we can still think that Bitcoin makes the world better by offering a unique set of trade-offs for those who need them. What are the trade-offs? Well, among other things, you have a very volatile unit of account where it's hard to price contracts in it so that you can match both the ingoing and the outgoing parts of your accounting and plan your internal economy. That's hard. But on the other hand, you can hold this thing yourself without a custodian. It has no makers who can inflate you out of the value or at least the percentage of the network that you hold. And you can trade it or give it to somebody else without the permission of a central bank or a commercial bank or any of their deputized partners. And it's digital. So that is a weird set of trade-offs that for some will be not very useful and maybe even unacceptable. But it can still make the world better because of those of us who do need to route around central banks or their deputized partners.
My fear with something like that, though, would be like failure to develop some kind of meaningful circular economy means that it becomes easier to target the ramps, right? Either into or out of Bitcoin. And in doing so, severely limit its use for like some of its most important censorship resistant properties. You're perhaps less willing to send the value over to WikiLeaks or the dissident journalist or the sex worker, whatever, if to buy that Bitcoin you had to go through KYC and things like that. And your counterparty at the other end is going to struggle to transact it unless they can either go through KYC or find an alternative path. Do you worry that like things like that further reduce like the potential target market for like censorship resistant use of Bitcoin?
Of course. So when people ask me what they should do, I rarely give advice, but I'm happy to give conditional advice. For example, if you really need Bitcoin as resistance money, then you should acquire some via cash. You should do a peer-to-peer transaction where you buy some Bitcoin from someone in person or perhaps online in some non-mediated or minimally mediated way. But do not, for the love of God, go on an exchange and then withdraw some Bitcoin to an address that is linked to your name and then send it to someone else who's going to withdraw it to a deposit address in exchange linked to their name. you've gained very little by way of resistance. In fact, maybe you've lost something by way of resistance, because in the middle is a public ledger that anybody can read, which is less private than commercial bank balances and wiring money and so on, because not everybody can read those ledgers. So you may have not only not gained any resistance, you may have lost some by doing it that way. So I don't give advice. I don't tell people, oh, go buy Bitcoin. But I do say, if you want Bitcoin for resistance purposes, then you should acquire it in the peer-to-peer way and dispose of it in the peer-to-peer way as well. Now, does everybody do this? Of course not. No, Bitcoin's mostly a speculative instrument. But that nonetheless can, on the margins, support those who want to use it in this peer-to-peer way. It does enhance liquidity. It does make demand higher so that there's somebody who wants it just because the value is elevated. So I don't want to discount entirely the existence of speculators and the positive effects they have, sort of like house flippers in a neighborhood. These aren't people who are going to live in the house, but they actually increase liquidity in the market and make it better for those who want to buy or sell houses for actual use when there are house flippers who are available, always ready to buy and sell.
Don't you think that you say makes it better for them? They're increasing liquidity. That doesn't necessarily make anything better. That just increases liquidity, right?
Well, increased liquidity will be linked to stability. It'll be linked to the ready saleability or the ready buyability, even on markets that aren't directly linked to the exchanges where speculation is happening. Because there's somebody who's going to do arbitrage between the peer-to-peer or circular side of things and the exchange side of things.
But I feel like a huge part of the criticism of the at least if there is a criticism of the price of Bitcoin, like one of the fairer criticisms that I've heard, if you're going to try to argue about Bitcoin and its price and it being a currency, is that because it's so volatile, its usefulness as a currency decreases because of that. And I think part of that is these liquidity merchants being available, right? These people who, whether we're talking about, I don't know, who was it? It was Jump, right? When there's like been a noticeable, people have been able to like track when Jump was involved in Solana and when they're not. And it's like, oh, look at the liquidity. Here's all of this. And then Jump wasn't able to trade it anymore and the liquidity disappeared.
Yeah, but I think if you ask Solana traders or Solana investors, they preferred it when Jump was there providing liquidity.
I'm sure they did. But I'm trying to say that those people, just like in 2008, like these people who are there to provide liquidity when times are good, or when there's a reason to provide that liquidity, are only there when times are good or when there's reason to provide liquidity. As soon as anything happens and there's any crisis where you actually do need liquidity, well, the house flippers disappear and the Jump cryptos of the world disappear. So that liquidity drying up actually hurts everybody in the end, because now the prices of all the values all around here are plummeting, or the prices of all the cryptos are plummeting all at once because all the market makers are gone, right? Like, I think that providing liquidity, it's the same as anything else. We're talking about a tool. You're providing a tool. A tool can be a weapon, or it can be something that is super positive. It can be a chef's knife, right? Like, it is pretty hit or miss whether or not it's a good thing or a bad thing, I guess, is my only argument there.
I think that argument would also apply to the example I gave of house flippers in a neighborhood. The house flippers will be less likely to be active in a real estate bear market and more likely to be active in a real estate bull market. It's still good. It's better for housing inventory that their people be there ready to buy and sell than not. It smooths out the price over time, and they hold the property and are ready to sell it. And not just when they're trying to move out, because they don't actually even live there, but they're taking a risk in order to provide that service of buying and selling. And maybe they provide that service more in a bull market than a bear market. Fair enough. Probably true in crypto as well as in real estate. And yet, nonetheless,
couldn't the argument be made that they help? Couldn't the argument be made that they help cause the crises that occur when they do occur? Right? When the housing crisis occurred, I would say there was a huge problem when it came to house flippers, but it was house flippers being given credit from the banks, being given, like, the house flippers were incentivized from all of the other parties involved, just like I think market makers and all these other people involved in leveraging up liquidity and the price of cryptocurrencies, whether we're talking about 3AC, right, or Celsius Network, or Jump Crypto or Cumberland Global or whoever. Like, these people are incentivized to be there until they're not. And then when they pull everything out, I feel like that hurts retail and consumers the most. So like, while house flippers might be helping the market in good times, they really hurt the end user the most when they have to leave and when there aren't any anymore. Like, the people getting hurt aren't just like the banks who are closing the mortgages on the houses. It's people who are having the mortgages closed down on them and having to leave their home, right? Like that, I guess that's what I'm trying to say, is that this is not, it seems like a net positive when everything is good, but as soon as times are bad, you can see that it isn't just a net positive anymore. And I'm thinking about this with a lot of stuff lately when it comes to like AI, crypto, like whatever. And this was a big part of the book, is you guys are suggesting like overall Bitcoin is a net positive, right? Like that this is a better thing for the world than, and for everyone out there, a lot of them, they're mostly philosophers. So they're like philosophizing about whether or not it is a good thing or a bad thing, or how and why. And that's why Bennett and I really enjoyed this. But and maybe this is why you guys wrote it, but it's kind of impossible to answer that, right? Like, I love cash, but
that's why we're friends, because I love cash too.
I know you do. But I also reflect on cash, and I'm like, I love cash for all of these reasons, but I don't know if cash is like net a good thing or not. I really don't. Like, there's a lot of terrible people that use cash. There's a lot of, honestly, guys, the reason I was reflecting on this so much today was because I was thinking about my wife in China. And I was thinking about the trade-offs that are made in those two countries, and the lives that we lead, and the drastically different lives that we lead, and the drastically different life she'll have when she lives in America versus the drastically different life that I have when I spend time in China. And those trade-offs are like super real, and I'm not sure one is good or bad, right? Like, I'm not sure. I know it's easy for us as Americans to be like, yeah, well, freedom, duh. Like, I get freedom. So why would I have it any other way? But it's like, oh, well, why would you have it any other way? They got like affordable healthcare, safety like you've never seen before in your entire life. There aren't mass shootings every other day. There's no crazy, stupid political shit because there's one political party. Like, there are real trade-offs, and they're not just negative trade-offs. And I think it's really tough for Americans to reflect on things like that. But it's also tough for us to reflect on innovation now, where I'm like, is it innovation though? Like, isn't it just a trade-off? Indoor plumbing was an innovation. Is AI the same kind of innovation as indoor plumbing or something? Like, are we saving lives? Are we drastically going to alter the way that humans live in a really positive way, period? I don't actually know. And I think it's a really tough question to answer with something as complicated as Bitcoin, truly.
There's a lot there, Cas. I live in Singapore, and I've lived here for my 13th year now, by choice. So I'm familiar with the idea of making a very different trade-off in the kind and quality of life that I enjoy here than what most Americans enjoy. This is not a liberal democracy. It is a democracy, but not a liberal one. And you can tell by my actions. Don't pay attention to what I say. Look at what I do. I've chosen to live in a place like that. So I get exactly what you're saying. Even though Singapore and China are very different places, there are some trade-offs that are similar in kind. When it comes to money, I think each of us is in a very different situation. We each have different lives. We each have, here's an image from John Stuart Mill. He's like, every man has a different back and shoulder, so every man needs a different coat. And the coat is your lifestyle. And so also for monies. We have different needs. Some of us need resistance, sometimes not. So I think it's good to add options that trade off in different ways. And that's what Bitcoin does. It adds this very weird little corner edge case that has some pretty severe trade-offs that not everybody will want. Now, does that make the world net better? So there are two questions here. Does it make it better for the user, and then does it make the world better? I think we can leave the first question to users themselves. We can let them decide which money to use. As to evaluating for the world, as you know, we have a device in the book to try to get at that deeper and more difficult question. This is the veil of ignorance. I'm happy to walk through that if you like. If not, I can just say read chapter 4 for anybody listening, and you can hear more about that. But the idea is to find a thought experiment that helps us think about things more neutrally without respect to which person we are, and then evaluate Bitcoin from that neutral perspective. But this, of course, is hard because each of us has a non-neutral perspective, namely our own. And it's difficult to break out of that. So you need these weird tools to do so.
Before we wrap this up, I need to channel my inner Micah Warren for a few minutes. We've kind of talked about how even many users who need more censorship resistance than their default fiat currency allows often choose other alternatives before Bitcoin. And like, for me, when I look at that and I look at Bitcoin, I see a small and often it feels dwindling pool of like transactors and participants in the Bitcoin network who regularly need or want censorship resistance. And I combine that in my head with the increasing number of Bitcoin under the control of relatively few individuals. We've mentioned Saylor. We can talk about Justin's son, Nayib Bukele, supposedly has a bunch of Bitcoins somewhere. I'm sure he'll tell people where eventually. And like, so there's a smaller number of people who use and need the censorship resistant features of Bitcoin. There's all these other parties who don't need them, or at least aren't using those features like as regular users to transact with people that they are often likely to be censored from. And I increasingly worry about like kind of what you all describe as a semantic attack in the book, where what is Bitcoin becomes changed, or there's this disagreement in what is Bitcoin. And maybe this comes from having like lived through the block size war, but like that seems always to me like a possibility, especially and like the specific thing I expect could eventually cause that crisis is like the $21 million, or not dollar, 21 million Bitcoins cap. My worry when I look at it is for Bitcoin to maintain its security budget as it is now going forward, and things might change. There could be additional development on various other ways to transact that minimize on-chain transactions. That will pretty quickly, in a decade, 2 decades, whatever, start to price out more and more people who need like the actual censorship resistance. And like that tension there, and I'm not being entirely clear, but like it seems to me that there are a lot of paths forward where Bitcoin eventually breaks into multiple things, where a group of individuals try to fork away and raise the cap to subsidize miners with further issuance, diluting the network effect like you talked about. Or Micah talked about a few of these different possibilities in his book. Large custodians eventually agree to fork off, even perhaps with minority hash rate, and declare their thing Bitcoin because of state pressure, economic pressures, contracts that they shouldn't have signed, whatever, some force that makes them have to try to argue this thing is now Bitcoin. What do you think keeps like Bitcoin as Bitcoin for the next several decades?
I think I can speculate responsibly only into the next few years and decades. You know, the responsibility quotient goes down as one looks further and further into the future.
Fair enough.
There's a lot going on here, Bennett. There's fee crisis FUD. There's semantic attack FUD. There's centralized control FUD. And you're giving a series of pretty dire stories where these all interact in ways to undermine Bitcoin's ability to be resistant money. I think there are both social and technical aspects that we'd have to think about to understand whether Bitcoin can withstand these attacks. So let's speak first to the technical. We need at least one major soft fork to enable sovereign, censorship-resistant use of Bitcoin for an appreciable fraction of the world's population. Let's say if we want to get an order of magnitude more than what we have now. So again, I'm not a hyper-Bitcoinization guy, but let's say that we wanted to enable a bigger portion of the world, let's say one order of magnitude more of the world, to enjoy these wonderful resistance money features. We need at least one soft fork to do that. I myself favor covenants, things like BIP 119, CTV, which allow for sharing of UTXOs in a trustless way and for enhanced privacy and self-custody. Now, the cool thing about the soft fork is that it doesn't require the cooperation of the whole network. You just do it. And as long as no major economic nodes within the network deny it, and as long as miners don't deny it, then you've basically won. So there's a technical side, and people interested in this can dig into things like BIP 119 or drive chains or other weird little supplements that could enhance Bitcoin's ability to function well for all. The social side is harder to evaluate because this is a matter of predicting what the crowd will do. And I agree with you, Bennett, that the pool of, let's call them resistors, people who use Bitcoin as money, and in particular as resistance money, that it feels like this is a dwindling pool. Now, here's a hypothesis. I think that in terms of absolute numbers, that pool hasn't dwindled and in fact has grown. But because the larger pool of Bitcoiners, which is mostly number go up goons, has grown dramatically, though that pool has been drowned out, or at least it's easy if you're not looking for it to be drowned out. It's much easier to find the NGU voices than to find Bitcoin is resistance money voices. But those voices could play an important role in preserving Bitcoin as resistance money in the future. Here are a couple ways they can do that. One is by economically enforcing a soft fork. That is, by instructing their nodes to upgrade, let's say with BIP 119, and to be prepared to do the so-called user-activated soft fork if anybody tries to hard fork away from BIP 119 or some other soft fork upgrade. Now, this is the nuclear option, because when you either signal readiness to do this or in fact do it, you're taking the risk of being on the wrong side of a fork. Now, who's willing to take that risk? Only somebody with something of greater value on the line, their own liberty, their own happiness, their own ability to not be thrown into jail or something like that. So as long as there's some people willing to do that and make a credible threat to do that, that is significant protection for Bitcoin. So a guiding hypothesis, let's say it's greater than 50% chance, but certainly not close to 100, is that there are still enough of those people around who are willing to make those risks, or at least to give a credible threat of doing so. And as long as there's enough of them around, then it keeps everybody else in check from engaging in some wild hard fork that will retard Bitcoin's ability to serve as resistance money or stop the ability of a soft fork to expand Bitcoin's censorship-resistant access to all in a trust-reduced way. I agree that on-chain access is quite important here, and that thinking about fees is the way to evaluate that. On-chain Bitcoin is the way to get it most censorship-resistant. And yet there's this dilemma for fees. Either the fees are low or they're high. If they're low, then everybody can use it. On the other hand, that means that miners aren't getting paid, and their subsidy pay is going down dramatically, indeed by half every 4 years. So that's no good. On the other hand, if fees are high, then people can't use it. So this is a fundamental dilemma. I'm not saying that Bitcoin is effed either way, but I think that there are variables here, both social and technical, and they interact too. So that's not a prediction. That's not a full-scale assessment, but those are the variables that I would look at, Bennett, when evaluating Bitcoin in the next 5 years, and then thinking more speculatively 10, 15, even 20 years out.
Yeah, that seems like a pretty good summation of what Bennett and I had in mind for talking about today. Is there anything that you wanted to discuss before we call it, Andrew?
I'm just glad to hang out with you guys.
Well, it was awesome talking to you. Bennett and I both really enjoyed the book. I know there's some deep cuts to critics in there, but we did both really enjoy it, and I actually do recommend that everyone go and check it out. I will say, it's kind of like an educational book. It
was written by three philosophy professors. I'm afraid we cannot hide that fact.
Exactly.
It has all the weirdness you might expect from a book written by three philosophy professors who've decided to build their careers on Bitcoin.
So with that understanding, it is not Number Go Up by Zeke Fox, which was like this enthralling discovery story. This is like teaching you about Bitcoin and money. It helped me realize there's Number Go Up. But this did help me realize things like there are people like you, Andrew, and others who are really good at talking about what money is and how it interacts with society and culture. And then there's people like Bennett and I, That is really not something we ever need to discuss ever. So I'm glad you're doing it, and people can read your book if they want to hear about that stuff, so that when Bennett and I eventually finish our Tether book, we never have to mention any of that in any of it. We could just say, read Andrew's Resistance Money book instead if you want to hear about that.
I will instruct people to read your book too. It's a deal.
Bitcoin is a cryptocurrency. We can skip the whole chapter that every crypto book has to have on what is Bitcoin.
I think the worst chapter is not the what is Bitcoin chapter. It's the what is money chapter, where our journey begins in the Isle of Yap. That's the worst part of every Bitcoin book for me. The tedious
100%
history of money.
Agree. Thank you, Andrew, for joining us. It was such a pleasure to have you on. We've been talking about doing this forever. Obviously, Andrew wrote this book. Hopefully his next book is about Cascoin instead, but